Good morning, traders. CRUS here with Traders Profit Compass with your morning look at markets for Monday, May 3rd. Okay, I hope you guys had a nice weekend, had a chance to recharge your batteries, and you're ready for a good trading week. So let's jump into it here. It's 6:15 as I'm starting the video. Quick look at markets, not really doing a whole lot. Large caps up 0.3%, NASDAQ's flat. Small caps up 0.75%, gold up 0.5%, silver up 1.26%, oil down 0.5%, and copper flat. I wanted to start off today, got a lot of charts to show you, wanted to give you a flavor of some of the market internals and relative strength, and then jump into the indexes, FATMAAN, and then a bunch of individual chart setups for today. So starting on the VIX, for the past, ever since the COVID started last year, 20 on the VIX has been a floor for all practical purposes, going all the way back to last year. Now, in March and April, we started to break down, and now in April, we broke below that 20, and now 20 is now resistance. I drew a downtrend line off of the recent highs. What I'd like you to do is, either set an alarm or pay attention. I think if the VIX stays below 20, that's going to be a relatively benign market environment where, we can feel pretty good about risk exposure, etc. But we get a breakout above 20, that would give the VIX quite a bit of running room and would probably tell us that volatility is increasing, probably some selling pressure coming in, etc. So even though you could get a breakout here above 19, I think 20 is the real level, because all this should act as resistance on the way back up. So, if VIX does pop 20, I think it's going to go higher. Taking a look at the Qs versus SPY, just dividing one index by the other, you can see here in early 2020, the Qs were outperforming. The graph is going up, and now we've put in what could be considered a top here, flat period, and now the ratio is falling in this wedge pattern, indicating that the Qs have been underperforming SPY since, the peak was right here in February of 21. So at this time, Qs are underperforming SPY, and what you want to watch is, does this pop back out? Does Qs start outperforming? If so, you would see a breakout here. If they continue to lag, this ratio will dribble lower and, eventually break the bottom of this wedge, which would open up more downside. This is the one I'm really kind of interested in. And this is the Qs versus IWM. The ratio peaked back in August. Remember, that's when we had the blow off top, and the Qs and all the FATMAAN names, they all spiked and then started to roll over. And then that was accelerated in November when we got the vaccine news. So since September, August of last year, IWM had been outperforming, shown by the falling ratio. And you probably noticed in April that IWM, the value cyclical trade, had a soggy month. And you can see that here in the ratio where the Qs were outperforming with the ratio going up. Now, I've put on the Fibonacci retracements. You can see that we have moved into this 38.2 zone. A real resistance level would be here at the 50% halfback. So we would see the cyclicals, the reopening trade, reaccelerate if this ratio rolls back over again, right? That would show IWM outperforming the Qs. And you know, that can be a combination of the Qs doing nothing and IWM driving higher, or the Qs going down and IWM going down less, showing that outperformance. So I'm going to watch this really closely for the reopening trade to reaccelerate into May and into June. And one last kind of risk on, risk off ratio that I like to look at is consumer discretionary against consumer staples. That's XLY divided by XLP. When you got the ratio going up, that's a risk on environment. You'd rather be in the discretionary names. When it rolls over, that shows defensiveness, and that's where the staples start to outperform. So you can see here we've held this uptrend line. I've got a resistance level here at about, let's just call it 260. If we get a breakout here, that would give us a clue as to the risk on trade taking a next leg higher. And if it rolls over, then the market is probably getting a lot more defensive. So this is a real easy chart to set up on your own. Just divide XLY divided by XLP, and then you'll have this graph that you can follow on your own. All right, let's get into the indexes. SPY 2-hour, just grinding in a very narrow range between this 416.75 and 420. Really, to get going, we've got to take out 418 and then take out 420 to get that next leg higher. Bulls certainly don't want to see this thing break down below this trend line. That would open up a move back down to 410.50. If we look at it on the 30-minute chart, you can see we made a couple big moves. This was the gap up. We came down, tagged the bottom of the range, V recovery. Then Friday, we gapped down, went back to the bottom of the range, and finished kind of on the lower half of that consolidation range under 417. So today, I really think for the bulls to get going, they've got to take out this 418.50. For active traders, if you got to move down to 416.75 and it held, I think that's a good place to try a long. Just for even a bounce up to 418, that's a $2 trade. That'd be a pretty good way to start out your morning. But you get a break below 416.5, then I think you're coming down. I do have a little level here at 416, but I really think you're going to come down to 414 and potentially all the way down to 411, 410. So that's an important level there, important level of support there at 416.75. Qs were again soggy on Friday, down 0.66%. Got to take out 342. I mean, that's all there is to it to get the next leg higher. I've got this uptrend line coming in. We've got a gap here at 333.74. Any kind of down move there to the top of the gap would be an objective place to try a long. But if that fails, then you're looking at 330s, 328s, 324s, and 324 was a really big level. So make sure you have that highlighted on your chart. But So today, I think if price takes out 340, you can try a long there. And of course, if price goes ahead and breaks out above 342, that would be a place to definitely be long. Move up your stops and your strikes to that level, and then we can look forward to higher prices. But all that being said, momentum still coming out, and RSI still kind of leaking. Here it is on the 30-minute chart. I've got all the levels marked for you. Here's that 337 that was support here, and a bunch of times on Friday. You want that to hold, otherwise you're going to come down here to this gap at 335.85. Probably bounce on the first tag, but then fill it. And then you really got to hold 335, or then you're down into the weeds, into the low 330s. This morning, if you can break 338.50, I think you can take a long there. Look for 340, 340.50, and then 342. IWM, bad day on Friday. It had this major support level here, and punched right through that and has yet been unable to recapture it. So this is looking pretty soft, and if we take it down to the 30-minute chart, you can get some good trading levels. Recapturing 225.50 would be a good place to try a long, to try and get a bounce up to 226.50 and then all the way up to 227.50. But as long as it stays below, the door's open for lower prices. Down to 223, which was a significant level back here. And if it loses 223, then you're down to 220.50. So, as it stands now, it's in a bearish posture, bearish RSI, bearish PPO. What it would take to change that is start reclaiming these levels on the way up. Before I go into the FATMAAN names, if you're new here, thank you very much for listening and watching. I really appreciate it. Hit the subscribe button and the alarm bell. That way you won't miss any of my content as I publish it. And even take the time to go over in the show notes, and there's a link to subscribe to all my content. That way you'll get all the midday notes and any trade ideas or anything I send out during the day right to your email box, and you won't miss a thing. Longtime subscribers, I really appreciate you sticking with me. I hope the levels are helping you put on more objective trades and keeping you out of trouble and keeping you on the right side of the trade. Please hit the like button and leave me a positive comment to let others know that you see value in what I'm doing. I really appreciate that. Okay, so Facebook. Big gap up on earnings, and now it's toggling within the opening range. So we've got a bracket set up from essentially 321 to 331. You can either decide to play the range, trying to short the high and buy the low, or you can wait for a range breakout. A breakout above 331 is certainly a place to get long. A breakdown into this gap below 321.61 is certainly a place to be short for about a $15 gap fill to the downside. Apple has played out like we thought it would. On Friday, we said there was a good chance that it would come down and find support here at 131.50. It did that. Now we're at a crucial spot. It's got to hold 31.50, or else it's going to come down into the 128s. We've got an open gap here that needs to be filled. This 127 was a relatively big level, and you don't want to lose 127. So really today, it's all going to center around 131.50. I think you can be long above with the target shown, or if it fails, you can be short with the targets shown below. Tesla had a nice day on Friday. Came right down to this 670, undercut it a little bit on the in the pre-market, but then once it recaptured it, it just went straight up, right up to key resistance at 707.50. We do have a downtrend resistance line here off the top, but other than that, a breakout above 710 would target 725. There's a gap to fill here up to 740, and then your upper target is 750 and then 780 if this keeps going. If you get a rejection here, then right back down to 670. So there might be a very interesting trade here on Tesla if it's something that you're interested in. And I would key off that 707.50 zone of resistance right there. See if it can break above or if it gets turned away. Microsoft has been soggy. Had the gap down on earnings. Tried to pop. The overhead gap was rejected. Got slapped down to 249. And now is kind of in between. I think for today, 254 is your pivot. Anything below that, I think you can be either out of it or try a short. If it breaks 249, you got a lot more downside below. If it breaks above 254, your first target is the gap. And then above the gap, 256, you're looking for 262. So some really important levels there on Microsoft. Amazon, we had surmised that they might fade the opening move. They did that. They brought it down. Anybody that bought their lottery tickets for the short side here at the open did really, really well on that. We'll have to see what pans out today, but your pivot is 34.50. Anything above that, I think you can be bullish. You can be long. You break below 34.50 though, I think you're going to come back to 3,400 at this support level. So key off at 34.50. Google walking along the bottom of the top of the gap here at 23.53. If you get a break below, you've got a $50 gap to fill. But as long as you're above, I think you can be productive and stay long or get long and look for a move back up to 23.90 and then 24.25. Netflix made a move off the bottom of this bracketed area that we set up. So now it's all about 515. If you break above 515, you got to get long. Look for these intermediate levels as targets, but your ultimate target is a gap fill all the way up to 550. So 515 is definitely your pivot point for today. Now on Friday, we talked about quite a number of stocks that had gaps, setting them up for bracket trades going forward this week. So Twitter, gap down, I think it was 14% or something like that. But now you've got a bracket. Set yourself an alarm at 57 for a potential move to fill that gap. And also set an alarm at 55. If it breaks 55 to the downside, get short and look for a move I would go ahead and look at your daily chart to see where daily support comes in. But I think it's down towards 52, 51 on the daily chart. But definitely 55 and 57 are where you should set your alarms. Skyworks also had a gap down. I'd be setting your topside alarm at 187, and I'd set a downside alarm at 180. You lose 180, then you're coming down into 176 and more likely into the 170s. If you can break above 187, you got a big gap to fill above. And don't forget, if you're down here and you want to, if you're bullish, you can be long against 180. I mean, that's perfectly fine. That's very objective. And at that point, you're just playing for a move back up to 187. And if it drops below, you're stopped out. So that's how you can play Skyworks. Cirrus Logic was another one where they pulled the rug. This is not the daily chart. This is a 60-minute chart. I have it mislabeled. I would set your alarm at either 74.50 or 75 here for a move back into the gap. Otherwise, I would set an alarm at 71. If it breaks down below 71, it's going lower. But as long as that holds, the bulls can make a stand here and see if they can fill that gap. Pinterest, same idea, gap down, bracket the trading range. And so now it's spent 2 days between 65.50 and 69.50. That's where your alarm should be. And just follow price, either out to the high side or to the low side. You should get a very tradable move once price moves outside the range. So that's why you set your alarms. You'll never remember those levels unless you set your alarm. So do that, before the bell, and be ready to roll if and when those alarms trigger. Peloton, sitting here on this ledge of support right here at 98, let's call it. You get a break below 98, could fall all the way down here to 80 after this, into this next lower value range. So be ready there. As long as it holds, the bulls can make a stand here, but the indicators are really weak. You got RSI below 50. You've got PPO that made a run but then rolled over at the zero line. That's pretty bearish. And you've got price below all the moving averages. So that's bearish as well. So we'll have to see if they can hold the line here at 98. And then finally, SMH. We had talked about being short SMH under 249. We had a little pop and then a gap down on Friday, and it just went straight down the whole day into this 242.50 area. So that turned out to be a really nice trade. Towards the end of the day, I said, you know what? If you want to stay in it, that's fine. Just realize you're at support and roll your strikes down so you capture the big win. Now today, if anybody's not in it, I would have your alarm set here at 242, which was the prior low. And if it breaks 242, notice this big volume over price void here. I think it'll find 236 pretty quick if 242 goes. So set your alarm there. All right, that's all I got. I hope you found some benefit in seeing those levels. Trust those levels. trade around them, and I think you'll do really, really well today. Let's see how the market starts to handle May. I think that volatility is going to pick up. We don't have any major sell signals, so I don't want to, jump the gun or get panicky. We just need to see, some of those overhead levels break out. 342 on the Qs, 420 on SPY. Those really need to go to give us a lot more confidence that the market is ready to take the next leg higher. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.